What is tokenization and why has RBI issued new guidelines? In September 2021, the RBI prohibited merchants from storing customer card details on their servers with effect from January 1, 2022 and mandated the adoption of card on file COF tokenization as an alternative to card storage. The Reserve Bank of India has extended the implementation date of card on file tokenization norms by 6 months to June 30, 2022. This follows a series of representations from several industry players and digital payment platforms who anticipated disruption in online transactions from January 1, when the new rules were to originally kick in. As per new guidelines, online players will have to delete any credit and debit card stored on their platforms and replace them with token to secure card details of consumers. While most of the leading banks including SBI, HDFC Bank and ICICI Bank are ready for the switchover, other stakeholders, mostly merchants, argue that systems at their backend are not yet ready to adopt the new regime and had short further time in putting new norms into effect. While extending the guideline, the RBI said that in addition to tokenization, the industry stakeholders may devise alternative mechanisms to handle any use case, including recurring e-mandates, EMI option, etc., or post-transaction activity, including chargeback handling, dispute resolution, reward, loyalty program, etc., that currently requires storage of COF data by entities other than card issuers and card networks. What is tokenization and why has RBI issued new guidelines? In September 2021, the RBI prohibited merchants from storing customer card details on their servers with effect from January 1, 2022 and mandated the adoption of card on file tokenization as an alternative to card storage. It applies to domestic online purchases. Tokenization refers to replacement of actual credit and debit card details with an alternative code called the token, which will be unique for a combination of card, token, requester, and device. A tokenized card transaction is considered safer as the actual card details are not shared with the merchant during transaction processing. Customers who do not have the tokenization facility will have to key in their name, 16-digit card number, expiry date and CVV each time they order something online. This could be cumbersome exercise and may impact transaction value, especially when done through stored cards. In case of multiple cards, each will have to be tokenized. What is the size of the industry and the impact of new guideline? India has an estimated 100 crore debit and credit cards which are used for about 1.5 crore daily transaction worth rupees 4,000 crore according to data shared by participants at a CII seminar on the subject this week. The value of Indian digital payments industry in 2020-21 as per RBI's annual report was rupees 14 lakh 14 crore 85,173 crore. Digital payments have triggered and sustained economic growth, especially through the trying times of the pandemic. While RBI's intent to protect consumer interest, the challenge on ground pertains to implementation. As per the CII, online merchants can lose up to 20 to 40% of their revenues post 31 December due to tokenization norms, and for many of them, especially smaller ones, this would sound the death knell, causing them to shut shop, according to participants at the virtual session on digital payments and the India Media Consumer organized by the CII's Media and Entertainment Committee. What's the consumer's impact? An estimated 5 million customers who have stored their card details for online transactions on various platforms could be impacted if the online players and merchants are not able to implement the changes at their backend. E-commerce platforms, online service providers, and small merchants could be especially hit. Equated monthly installments and subscription based transactions that are paid through stored cards will also have to adhere to new rules. Now, with the latest extension, the RBI expects the systems to be ready for seamless launch in 6 months. While 90% of banks are ready for tokens on the Visa platform, MasterCard is yet to catch up. The RBI had banned MasterCard from issuing any new cards on July 14 this year for not complying with data localization requirements. Even as COF conversion to a tokenized number is being done, the system is not geared for processing the tokens as merchants are not ready at their end. Why did the stakeholders want an extension? Digital payment firms and the merchant bodies had sought urgent intervention of the RBI to extend the deadline for implementation of the new credit and debit card data storage norms or card on file tokenization. They wrote to the central bank that if implemented in the present state of readiness, the new mandate could cause major disruption and loss of revenue, especially for merchants. Disruptions of this nature erode trust in digital payments and reverse consumer habits back towards cash based payments. Merchant Payments Alliance of India (MPAI) and the Alliance of Digital India Foundation said in a joint letter. Some banks had also written to the RBI seeking extension of the implementation of the new norms according to sources in the industry. Industry sources argue that all stakeholders, bank, card schemes, aggregators, gateways, processors, merchant, consumers, and the regulator in effect have to come together for successful implementation of the norms, which require time and preparation. Specifically, the RBI policy change affects three major players: banks, intermediary payment systems, and merchants. Stakeholders sought a phased implementation of the new mandate, a minimum time frame of 6 months for merchants to comply post readiness of banks, card networks, and payment aggregators, payment gateways. What is the preparedness of the bank? While industry bodies claimed in a letter of the Reserve Bank that RBI regulated entities were not prepared in the absence of a hard mandate to comply, banks say they are seized with the matter and merchants might require some more time for integration. HDFC Bank, ICICI, and SBI cards already have the card tokenization system in place for online transaction. While few players have device-based tokenization, SBI cards with Samsung for contactless NFC, near-field communication payments, other banks have already initiated the process. Many are ready with the new system. SBI Chairman Dinesh Khara had recently said it involves integration of the system between banks and merchants. As far as banks are concerned, they have started working on it. For our purpose, the operative part came in the month of September. As far as merchants are concerned, they might require some more time. A report by Mbaki Global Financial Services said instead of creating own token generating engine using the payment networks, Visa or MasterCard engine will be far more cost efficient and technologically advanced and will have merchant acceptability. MasterCard and Google on Tuesday announced the rollout of tokenization that will enable Google Pay users to transact using their MasterCard credit and debit card. Many banks like SBI, HDFC and HSBC are using MasterCard for transaction. Three steps have to be completed for smooth implementation of tokenization. Token provisioning: the consumer's card number should be convertible into a token, which means the card networks have to be ready with the relevant infrastructure. Token processing: consumers should be able to complete a transaction successfully through the token. Scale up for multiple use cases: consumers should be able to use the token for things like refund, EMI, recurring payments, offer, promotion, guest checkouts, etc. Thank you.